What's up, everybody? Jaspreet Singh here, and the Federal Reserve Bank just said that you need to be prepared for things to get worse. So around 2 o'clock Eastern time today, the Federal Reserve Bank released some meeting minutes. And in those minutes, what they said was that if inflation continues to persist, that they will be doing more restrictive monetary policy. What that means is that they will be willing to raise interest rates even more aggressively than what they've been doing right now, and they'll be willing to do more aggressive quantitative tightening. And what they also said is that they're planning on increasing interest rates in the end of July this month, and they plan on increasing interest rates between 0.5% and 0.75% in the end of July. And this is after the 0.75% interest rate hike in June. And that 0.75% hike in June was the biggest interest rate hike that we've seen here in the United States since 1994. And they said that they are considering doing something similar again. And then they said if inflation still does not cool down, that you need to be ready for an even more aggressive interest rate hike. So the reason why this is important to understand is because the interest rate hikes affect the economy, they affect the stock market, they affect the crypto market, they affect the real estate market, because now when you raise interest rates, it makes doing business more expensive. It makes it more expensive to buy a home because now your mortgage rate is higher, and it affects the stock market because then as business costs go up, it pulls asset prices lower. And so what the Fed is now saying is, yeah, we understand that this inflation problem is a real problem, and we want to get more aggressive in this fight on inflation. What they said was, let me just read you the line. Quote, participants concurred that the economic outlook warranted moving to a more restrictive stance of policy, and they recognized the possibility that an even more restrictive stance could be appropriate if elevated inflation pressures were to persist. So what they're saying is, yes, we have to get more stern on inflation now, which is kind of funny to hear because 7 months ago, they were saying that inflation was transitory. And then 6 months ago, they were saying inflation is a problem and we'll worry about it later. Because in January and February 2022, they started saying that inflation is a big concern. However, they'll start fighting the inflation problem in the near-term future, which didn't really make any sense. Why are you saying it's a problem in January but not doing anything about it until March or April? So that's what they're saying now. And the reason why they're saying all this now is because they're saying that their goal is to bring inflation down to 2%. They are sticking by this goal that if you want to keep the economy growing sustainably, they said that they want to bring inflation down to 2%, which is quite a bit a ways from where we are right now at like 8.6% inflation. So they want to bring it down. And what's interesting is the Fed in these meetings, in these meeting minutes, did discuss the risks of a potential recession. And what they said was, yes, we understand that people and the Atlanta Fed are now downwardly revising the Q2 economy predictions, essentially saying that they're predicting we're in a recession right now. However, the Fed said that inflation is a bigger concern and they want to stick on their fight on inflation, and they're not worried about the economic slowdown. So they are still working to fight inflation, even if the economy starts to slow down, even if we see more layoffs, even if we see more bankruptcies, even if we see more foreclosures. You can expect interest rates to go up because the fight on inflation is more important. That's kind of what they hinted at in these meeting minutes. And if inflation doesn't come down, expect interest rates to rise up even more aggressively. So that's what they're saying. And this affects companies because we've already been seeing tech companies feel the effects of this. They've been doing a number of layoffs. They've been doing a number of hiring freezes. Look at crypto exchanges. Voyager today just announced that they'll be filing for bankruptcy. A big cause of this is the rising interest rates because now they could not find a way to turn a profit. People are pulling out of the crypto because speculative assets go down when you have interest rates go up. And so if you do invest in crypto, first off, make sure you take all of your crypto out of your exchange, put it in a wallet, put it in a cold wallet or a hot wallet. And if you are using exchange, use a reputable exchange. I recommend FTX US. They are a sponsor of Minority Mindset. I like FTX US because one, it's very easy to use. You can buy and sell cryptocurrency with a click of a button. You can enter in how frequently you want to buy cryptocurrency. You can buy Bitcoin every day, every month, every week. You pick your frequency, and they have some of the lowest fees out there. So you can have more of your money going to actually buy your crypto instead of just making your brokerage richer. And FTX US is interesting because they've been the ones that have been supplying money to some of the other brokerages. Like they bought a chunk of Robinhood. They gave out a big line of credit to BlockFi. They're actually trying to buy BlockFi right now. So kind of an interesting way that they're doing business. And right now you can trade crypto, you can trade NFTs right off the platform. And pretty soon you'll also be able to trade stocks on the FTX US platform as well. And because you're a fan of the minority mindset, they have a program going on right now where they will give you $20 worth of crypto for free after you trade $150 worth of crypto on the platform. All you got to do is enter in the referral code minority and use my link down in the description below. So if you want to learn more, check it out. I'll got the link for you down in the description below. This brings me to the second point that I want to talk about, which has to do with oil. So oil prices have shot up significantly over the last number of months. Part of it is due to inflation. The money printing part of it has to do with the Russia war. And now, just the last couple of days, we've seen oil prices tank, fall down very aggressively. And the reason why, according to all the analysts and economists, is because people are worried about a recession. Because when you see a recession, businesses slow down, economies slow down, some businesses go under, so the demand for oil drops. Right now we have a low supply of oil, which has been pushing the price of oil up. However, with a recession, the demand for oil drops. And so people, investors, out of worries of this now recession, because we've had the Atlanta Fed in the last few days come out and say that essentially we are in a recession right now. Then you have the Federal Reserve Bank saying, get prepared. It's probably going to get worse. We have a lot of people talking about how this recession is now going to be here sooner than expected. And so investors are saying, if we're going to enter this recession and demand for oil drops, then people are not going to be traveling, people aren't going to be going on vacation, and businesses are not going to have the same demand for oil. That's going to cause oil prices to drop. And so you have some investors trying to cash out, and that caused the price of oil to drop pretty significantly. Now, this is good news if you're a consumer, at least for the short term, because that means, hey, hopefully gas prices will come down for a short term, and you'll be able to fill up your gas a little bit cheaper. Hopefully air prices will come down. But again, we don't know how long these low prices will stay around. If we don't see demand drop in the short term, then that means that prices of oil could shoot back up because the supply issue of oil hasn't been solved yet. So you can expect oil prices to continue to stay volatile, but there's something that you want to pay attention to because there's been a lot of confusion as to what's going on with oil. A lot of people are saying that this is an indicator of the recession. There's so many different recession indicators out there. Oil is a recession indicator. Copper is a recession indicator. Bonds are a recession indicator. Anything can be a recession indicator, but at the end of the day, you really just have to understand what's going on with the Federal Reserve Bank, because if they are working to pull cash out of the economy, meaning they're doing quantitative tightening, meaning they're raising interest rates, they're selling off their balance sheet, and the economy isn't robust enough or strong enough to withstand this type of quantitative tightening. It's going to cause an economic slowdown. It's going to cause an economic pullback. So those are the things that you want to pay attention to. All the other things are really other indicators that kind of show the demand, the consumer sentiment. It shows how people are spending money, how businesses are doing. But the ultimate root comes down to what's going on with the economic monetary supply. Now, the question is, what do you need to do? Because a lot of people are worried now about a recession. And I've done a number of interviews on different channels. Some of them are health channels, different types of channels on YouTube and podcasts, talking about how you can prepare for this coming recession. Because the reality is recessions are scary. People do get scared. You worry about layoffs, you worry about people losing jobs, you worry about companies going under, you worry about foreclosures, you worry about defaults, you worry about bankruptcies. But for the minority people, for investors, recessions and market crashes are great news because they provide opportunities for you to come in and buy assets at a discounted price. So the thing that I want you to be aware of is, well, yes, you can see more layoffs, you can see more economic slowdown, you can see more pain when you have this type of recession. You can see asset prices drop. This is where you want to come in and buy. And I was talking about this, I talk about this quite a bit, but I was talking about this in a recent video, and I got a number of comments of people saying, well, I have bought and I've been buying, but now my portfolio is in the red. I'm losing money. So how is this a good thing? And this is where you have to have that patience and understand what is your time horizon. Traders tend to lose a lot of money when you have these types of economic crashes and recessions, because if you're a buyer, not a short trader, but if you're buying for the next 6 months or 3 months, well, those are not good times, because when you have these types of market crashes, you don't know how long it's going to go down. You don't know how long it's going to continue struggling for. But this is where, if you have the fundamental long-term mindset where you say, I want to invest in strong companies. I want to buy shares of strong investments that I believe in for the long term, and I want to buy them when they're on sale. Well, when companies are firing people, when they're laying them off, when they're cutting their departments, when they're worried about how they're going to pay their next bills, this causes a lot of fear, not just for those bad companies, but also the good companies, because people get worried. And this causes the price of all assets, good assets, bad assets, to fall, because people get worried, they panic, and they sell. This is where now you can come in, try to find those good assets, whether it's a stock, whether it's a business, whether it's real estate, whether it's cryptocurrency. You can find whatever it is that you want to invest in. When you find those good investments, now what you're looking for is a good price, because you already have done the research on which asset you want to own. Now you're just looking for a good price. And when you have these types of slowdowns, this fear, that creates an opportunity for you to buy. But you also don't want to just try to perfectly time the market, because nobody can time the bottom. Nobody knows how deep this recession is going to be. No one knows how long it's going to go for. No one knows what the Federal Reserve Bank is actually going to do in this meeting in the end of July. No one knows what they're going to do in September or October or November. So this is where, instead of perfectly trying to time the market, you want to look for the right opportunity. That means when you see a good buying point, when you see the asset that you want to own fall by 10 to 15%, come in and buy. If it falls by another 10 to 15%, buy more aggressively. The lower it goes, the more aggressively you want to be buying, assuming it's a good investment. And if you don't want to spend that time trying to find the perfect company and do all the research, then look into buying ETFs or index funds, because that lowers the risk. Yes, that also lowers your upside, but you have less risk. So if you don't want to put in all the work to research all the companies, find some ETFs, whether it's the S&P 500, whether it's emerging markets, whether it's whatever you want to invest in. Look for the opportunity and spend your time and effort when times are okay to build that buffer, that cash buffer. Spend less, earn more. That way you have the cash now come in and buy the assets that are on sale. So when you see the opportunity, come in and buy, but you have to have the long-term mindset, because we're not going to see the same thing happen now as we saw in 2020. In 2020, it was a V-shaped recovery. The market crashed faster than ever, and then it rallied faster than ever. We're not going to see that happen now, because we have the inflation issue. So the Fed can't just stimulate the way that they did, or at least we think they can't stimulate the way that they did in 2020. Sure, the Fed might change their mind later on. However, you want to just be looking for the right opportunities. And when you see an asset fall, that's a good opportunity for you to come in and buy, assuming you've done the research and you know it's a good asset. If you enjoyed this video and you want to see why we might be entering a once-in-a-lifetime opportunity to build wealth and what you can do to capitalize on it, I already made a video covering it, and you can watch it by clicking that button right over there. Thank you for watching, and as always, keep hustling. When the 2020 pandemic happened, that was when the stock market and cryptocurrency was the biggest opportunity. Next time,